Hello, I'm Vidya, your tutor. Let's learn recording of transactions, two together, step by step. Welcome back, I am Vidya. After the journal, we move to specialized books. This chapter covers the cash book, the ledger, and other subsidiary books that make recording faster when transactions are many. The cash book records all cash and bank transactions. It can be a single column, double column with cash and bank, or triple column adding discount. Interestingly, the cash book acts both as a journal and as a ledger account for cash. For small daily expenses like postage and conveyance, we keep a petty cash book. Under the Impress system, the petty cashier starts with a fixed amount and is reimbursed for what is spent, keeping the float constant and the main cashier free. When credit transactions are frequent, we use special journals. The purchases book records credit purchases of goods, the sales book records credit sales, and there are returns books and bills books too. Cash deals never enter these books. Suppose cash sales of 8,000 rupees occur. We debit cash account and credit sales account. Then we post to the ledger. In the cash account, we write to sales 8,000 on the debit side, and in the sales account, by cash 8,000 on the credit side. At period end, we balance each ledger account. We total both sides, find the difference, and write it as balance carried down on the smaller side, then bring it down as the opening balance for the next period. This shows the net position of each account. To recap, the cash book handles cash and bank and serves as both journal and ledger. The petty cash book uses the Impress system. Subsidiary books record similar credit transactions, and finally we post everything to the ledger and balance each account. Great work! Keep learning with Vidya and visit CBSETest.com for free lessons, worked examples, and practice tests.